The theme's been, Fran, here in the United States, that nobody's getting a raise and the rich keep getting richer. Well, that is starting to change. The Atlanta Fed has a wage growth tracker. It's now at its highest since the recession. And not only that, take a look at this chart that we brought along here from the Atlanta Fed. They have divided it up into high wage, low wage, and medium wage jobs. That's the unemployment rate there that shows wage growth, shows unemployment for those three categories has been coming down across all of the three. Now, let's take a look at the other chart that shows gains for wages going up at a faster rate for median and low-wage jobs. Median wage growth for low-wage jobs is now back to its 2003 to 2007 average. High-wage job growth is only at 75% of its pre-recession average.
I look, Mike, at these dynamics, and it's clearly a better economy. Are we at escape velocity yet on GDP growth?
No, we don't seem to be. But the question is, how low is the atmosphere here? If your potential growth rate is only 1.5% to 2%, right, you could argue we're there. The Atlanta Fed also tracks GDP now, and they're tracking 2.5%. But it doesn't seem to stay that way.
Can you bring it over to wage growth and say wage growth is not at escape velocity, even if we get better wage growth?
Well, it is moving in that direction, and that's the issue. Is it starting to feed into inflation? And according to the Atlanta Fed's numbers, if the trend continues, that's likely to happen, and that does produce some more inflation. Jim Bullard talking about that this morning in his remarks over in Beijing, suggesting that when you look at the inflation, the actual inflation numbers, and what's happening in the labor market, you've got a case for raising rates, at least according to the Fed's path. The market is saying, look at expected inflation going forward. They may not be incorporating wage growth of this level into it, and he says you've got a case for not doing anything. He doesn't make, at this point, a distinction or say which way he's going to vote.
But, Michael, we understand that actually they're ready to overshoot on inflation, right?
There's been talk of that, but a number of Fed officials have told me, no, they never reached agreement to actually do that. The issue is inflation's low enough that they can let the economy run relatively hot and not risk going too high. But they don't want to go too far over it because then they might have to slam on the brakes, and the markets wouldn't be ready for that at all.
Yeah, but so, Michael, what I don't understand is that is there still a shift? So we heard from a lot of Fed policymakers, right, that they're ready to act even in June. Is this just to shift market sentiment, but we actually don't think that they will go in June? Talk me through the psychology here.
Well, they want to raise rates. They feel that rates are too low. They lowered them to zero, and now they're just barely above that for an emergency, and that emergency is over. However you want to look at the growth rate in the United States, it's definitely not in a recession, and so they think rates need to come up higher, and they want to get there sooner rather than later, and they don't want to have to do it all at once. So if you do a little bit in June, then you've got time to wait and see what happens.
What's a Monday with Michael McKee without the dots chart? Let's bring up the dots chart to review, folks, for the quiz Friday. Here's the dots of people here, the Fed people gaming us out to longer term 2018. Here's sort of the center tendency of their belief